What's up, YouTube? Day trading for dummies. We're going to get right into it. We are taking a look at Z Classic right now, and this has had just an absolutely ridiculous few days. I mean, down here, you're looking at, see it, you're looking at a low of around 68,000 Satoshi, and now 280,000. So, I mean, the percentage there is absolutely ridiculous. And subsequently, day traders are having a lot of fun sort of speculating in this market and trying to, make some money in it. So let's just start breaking down the way that we start going about this. Let's get all of the lines out of here. And what I like to do is, if you're doing some day trading, I like to start with the 4-hour chart. I don't take it out to any longer timetable because I'm not going to be in this market long enough to see all the way here, wherever this might be. I'm not going to be in it that long. I'm only going to be in it for maybe a few candles this way. So looking at the daily chart, it's too big of a time frame to factor into the short consideration. So we start with the 4-hour chart, and we just try to establish a few little trends, a fundamental trend of peaks and a fundamental trend of lows. And there we go. Okay. And so that is the current trend as it stands, and this trend has not been broken. Now, eventually it will break. Things can't go up forever. But if you study Elliott wave theory, you can begin to theorize where this might end if it completes the 5-wave cycle. Now, of course, there can be any number of conditions that change that from happening, but if we hold true that these patterns and these cycles can happen, then we know that at some point there will be a 0.5 of what is basically 1, 2, 3, 4, and 4 down here, and this might be 5, but 5 could be up here. See, it's the thing with Elliott waves, you don't know where that next point is going to be exactly, but you know there's going to be a pattern of higher, then a little lower, then higher than the previous high, lower, but not lower than the previous plateau, and then higher than the previous high. And on this chart, we've already seen the full formation of an Elliott wave on the 4-hour chart, but this candle could extend to this point to continue this trend of peaks. So it's a very consistent pattern to see this jumping up very quickly during this rapid speculation, and then the trend completely reversing. So to just give you a very rough idea of what that could look like, very rapidly up here touching the peak, and then given the amount of action in the last few days, utterly ridiculous drop, trend correcting. Basically from here to here is a bull trend as it corresponds to the 4-hour chart, and then this would be the reversal, new bear trend. That would be the next thing you want to graph. So now, getting more specific, because a lot of this is analyzing sort of different time frames. So after the 4-hour, I take it to the 1-hour, and I start to get more specific in my mapping of the smaller term trends. And since I'm doing this quickly, I'm not going to take the time to change all the colors, but normally I have like one color for 4-hour, one color for 1 hour, and so on. But in this case, looks like we broke above that, so is the trend of lows. All right, we got our lines drawn on the 1-hour. Let's take it to the 15-minute. And the 15-minute, it almost looks like that it really depended on where this goes, that we might have a trend of peaks where the next peak doesn't break past the previous one. And that's a first indicator of a trend correction. It's like right now as I'm making this video, this candle turning red concerns me, because if we see on the 15-minute chart action that does this, this is an indicator that we're not going to break above this previous high, and that this high right here was effectively the end of that bull momentum on the 4-hour chart. But see, to know that this indicator was here, you had to look at the 15-minute chart to know that the influence in that small time frame is going to amount to influence on the bigger time frame. And since the bigger time frame trend is almost out of gas, this might be a time to jump out of this market and be gone for good, or look for a more favorable re-entry. Now to take it down even further, you can go to the 5-minute chart if you're minute trading, as I call it, and even the 1-minute chart. And once again on the 1-minute chart, we saw it get up to this peak, came down, it hit that trend of lows, and now it's marching back up to this point, and it doesn't seem to be breaking higher. So that's sort of concerning that we haven't exited. Now of course, we look at this pattern here. This is called an ascending triangle. So like an equilibrium. You had this big blast upward, this consolidation, and then it sort of does this. Watch my cursor. Boom, 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 boom. And then it will come to right around like this area where my cursor is, and it'll break one way or the other. It happens too often. I can't tell you which way it's going to go, but I can tell you that it'll go sometime in the next 30 minutes, maybe an hour. I mean, I don't know how tight these candles are, but that's the point, though, is if we don't break above the previous high, big indicator that we reversed. And so that's how you play it. What you try to do is, now that you've done all of that analysis, right, you have to decide in your own judgment, do you think it has enough energy? Do you think it's going to continue on the 4-hour? And if it does, if that's your sort of premise, right, then you try to scalp profits near the trend of peaks and buy back in near the trend of lows. And this can be very effective as the trend holds, but of course, if it doesn't, you can be left being a bag holder, and that's why stop limits are very important. So in this case, let's say you bought it at what, 280, right? And you're hoping for it to break above 300 or 30,000 Satoshi, whatever, But it doesn't, and if it doesn't, you're thinking that the bear trend will take you all the way back down to like 150. You set your stop limit at maybe like 270. If the price goes below 270, we automatically sell, and we take a small loss, but the stop limit can really save you when these incredibly volatile markets turn around. And there's one last thing to mention, is that when markets have been kind of getting pumped up like this in a few days, these speculative huge waves upward, the subsequent corrections are even more severe than the initial run-up. So a good example of this is the Bitcoin chart, the Bitcoin price chart. If you look at the more recent trend we've seen over the last couple of weeks, we're down at like 6,700. From here to here was just one single bull trend. We had a little bit of corrections, but nothing that ever took it below the previous runs. And so the trend held. But in the last day, look at that action. We've already gone lower than where we were before. And this is a clear indicator with Bitcoin that we are going to have some negative price action over the next week. And it's actually why I tried to sell my effing shares at 9,500, and then it tells me I failed to process sell order. I'm very annoyed with that. But needless to say, at this point, what you do is, if you weren't able to get out here and you've seen the steep dip down, if you got a set of testicles, you wait for the dead cat bounce. Dead cat bounces look like this. There's always like a little bit of a rebound at some point. I don't know how far down this goes, but eventually, even if it's going to go down further, that little bounce up. That's just how this stuff works. It's a dead cat bounce because it's not going to come back to life. It's eventually going to die. So, but you wait for the dead cat bounce, and maybe you put a sell order at like 9,100, and then you exit at that point, and you look for a re-entry like down here. And yes, this is not foolproof. You will make lots of mistakes, and you will be wrong many, many times. But if you're right, 50.1% of the time, you make money. It takes time, but you do. And you accumulate a few more shares here and there, and you eventually can outperform the market. I know that's kind of hard to believe, but it's doable. That's all I got. How do I turn this off? That's how you do it.